The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Thursday, the 14th of May. My pleasure to be here Monday through Friday. Dow's up 150 at 18,523. S&P's up 14 at 2166. Comp index is up 35 at 5,041. Gold was down 20 something, and now it is down. I lost it. Down 14 at 13.28. Silver's down a little bit, and we've got the dollar also down 4 cents at 96.18. Very interesting patterns that we're looking at here. And in the crude oil at this particular moment is, I'm losing my, did I misplace that? I'll do it right now. Crude oil is, right now, crude oil is up 75 cents and 75 CL. That is not crude oil. It is Colgate-Palmolive going for leg C. Remember we spoke about this the other day, and it's actually doing very well. Crude oil at this particular point is, in fact, up 63 cents at 45.38. It's just in this area, I don't really see strength at this particular point, but at the same time, I mentioned yesterday that the whole 44 to 43.60s, I think I said, that's going to be critical. 43.24 level is going to be critical to hold, because if it doesn't hold, then all of a sudden that weekly chart starts to see this, the MACD get very close to breaking down. At this point, it's holding pretty well. So that's the way I see it right now. I see crude oil digesting those huge gains. What did we say, about a 60-something% gain from the low back at $32.23 on the week of the 12th of February, running all the way to 52. Hey, 1/3 pullback is fine for crude oil. But over a period of the next year, I think crude oil will be going lower, and quite a bit lower. All right, so let's go on to what we're looking at here, which will be the TLT. This is going to be very important. The TLT, I can now put, I'm going to wait a day. I should put a down arrow. No, I am going to put a down arrow. It's met all my criteria, so I'm going to put a down arrow. The peak E in the Chapman Wave methodology, the fifth highest peak at 143.62 in the Lehman T-bond, Treasury bond ETF. It's made a high of 143.62, trading now at 139.41. It's 4 points down. And what's really interesting about this particular pattern is that within the context of the time frames, the daily chart has gone to a peak E. The weekly chart is in a leg E. There's just hardly any chance that by tomorrow we can get to 143.63 to extend leg E. So this is a good chance that you're making a peak E, but the MACD and stochastic are still very strong. And the monthly chart has an E/C. I'm just going to call it E/C for now. I'm not going to make any real commitment, because my thinking here is that it's actually a C. And then over a period of time, we're actually going to go higher in bonds and lower in yields as the contagion of lower rates is pervasive right throughout the world. I don't see how the Fed can just suddenly start to raise rates at this point, even with a couple of good reports, economic reports coming up, and there have been. We'll see. So in the meantime, back at the ranch, if you look at the dollar right now, it's holding well, but holding well and being the lead currency is one thing. Seeing the British pound rally as it did earlier on is another thing altogether. Now, I hope Carlos still has his position. We spoke about that. He called in. He had a fantastic entrance, almost at the exact low. And my recommendation was that if ever the British pound had a chance of having a pretty good rally within the context of a very bearish monthly chart and a not very good weekly chart, this is the opportunity, and that he should take some, if it pops up, he should take something off and keep 1/3 of his positions. And that allows for the chance that the British pound at 1.35 high, just about, that was this morning, 1.3491, and at this point trading at 1.333, could pull back just a little bit, but it looks to me like it wants to attempt to get into the close of this candle right here. This is the candle, that horrible candle of the 24th of June, where it opens at 1.50 and it goes down to 1.32. That is just a monster move in a currency. And if anybody knows anything about currencies, you know that currencies trade in massive quantities. Why? Because it's not, I would normally say it's you or I who are trading these things, but that's ridiculous. It's not even institutions. It is governments. And when governments put their mind to trading, they use rather big amounts. So the euro has tremendous volume, and so do most of the currencies. So what we're looking at here is that there's a chance that you can get into the low of the opening bell, which is at 1.499. 1.499 is right there. Is that right? That's no, it needs to be the close. 1.366, I'm sorry, 1.336, and that is a little higher, and that's where I would start to peel off maybe a little bit more. That's the way I would do it. All right, I just thought I'd go through that. Why not? Question about pot, POT. Trading very well, up 46 cents at 1733. Nice action. Yes, if you are long POT, trading at 1732, up 45 cents. Hold on to the long. Where would I add to it? I would add to it if there's a pullback over the next 2 days. It's at 1732, anywhere between 1705 and 1695. I would add another small portion. Now we're looking at a question about MOS. That's MOS right there. And that is Mosaic, I believe. Yep, the Mosaic company. And it's trading at 28.20. It looks the same. And it's about to test this downtrend line in the weekly chart right there. So I'm going to suggest to you, if you are long, where would I get in? I'd get in right this very second at 28.23. This is a completely different trade because you're getting in late after a big move from 24.5 to 20. You've missed 4 points. You can't go very big long, but you can start a position, and then you want to add to it between 28.23. I would add to it between 27.25 and 27.25. Oh, I don't know if it'll get there. Anyway, 27.25 and 26.90. I'd add, and that one I'd have a 1 point stop. All right, another couple of questions. I'm long and loaded. Good. I'm not going to say anything. Very good. Congratulations. Huh, I should have seen that before. I wouldn't have spent my time. When you look at the VIX index, the UVXY. All right, let's look at the UVXY. It's one of those inverse. No, this is a long position on the VIX index, trading at 664. ProShares Ultra VIX short term. Yeah, trading at 664. I'll get into that, but I'm also going to try to talk about it in terms of the volatility index, the VIX itself, which is trading at 1302, only down 2 cents. This is nice action that we're looking at in the VIX index. I'll talk about it because if ever there was an opportunity to do a little bit of a trade, this might be it. I'll be right back. Basil Chapman, Dow's up 155. Be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, so while we're on break, as always, I answered a whole bunch of questions in the Dan about different stocks, but I'm going to go right back to the UVXY in a moment, but we've got Brent in Martinez, California. Brent, how are you?
Doing great, Basil. How are you today?
Well, you had your eye on CF Industries. When did you go long?
This is another one I always watch, or I have on my list, and was watching, constantly. I got in at 23.20 is my buy-in.
Oh my goodness! So actually, you got in just really soon after it turned up, and that was a very sharp decline. So you got in, and did you put a stop in at all, or did you just go in and see where it went, and then you would deal with a stop or anything like that?
It had more or less hit a number that I had kind of projected, and I was more of a mental stop, to be honest with you. If it were to go below that, the low of that day,
yep,
I would probably, a ways down. I was going to give it some room, but it seemed like it had finally hit some levels that going back historically that were, worth buying, and it's something I wanted to kind of keep longer term, to be honest with you.
I don't remember what they do, CF Industries.
Well, one of the reasons I called is because you're talking about fertilizer companies like Potash and Mosaic.
Right.
Agrium. It's within the same area.
Okay, it is in the same area. Okay, very good.
Yeah.
So I'm the last buy mode in the, let's see, in the monthly chart, had a peak D top, I believe. I'm doing this quickly. I'm doing it by eye. I'm almost sure that that's lower. 34.11, 33.87. Yep, my eye was good. So CF Industries makes a high above 70. It drops a little bit, drops down to the 22.75 level. And that's a 2/3 its decline. And what happens is it holds the 200 period exponential moving average in the monthly chart. The weekly chart saw a MACD that had been rising steadily all the time as it was coming down. That's a nice positive divergence. And the stochastic on this last decline was way higher at 13 to 14% than it was when it was in the single digits way earlier. So I've got a feeling that besides the level that maybe you were looking at as a target area to find out if it's got support, if you look at the technicals, there were underlying positives that said that CF Industries trading at 28.11, up $1.19, up 4.42% right now, was in fact building a really strong divergence between strengthening technicals and weakening price. Now, if you use a couple of techniques, for instance, Garo, who often calls in over the years, he's always used, for a long time, he's used the, this is called the parabolic SAR, right? And it broke out and it gave a real nice signal, and that's working very well. It's now above the, let's just double check because I believe that is the 50, yep, it's a 50 period exponential moving average. Last time it did that, it didn't hold for more than 2 days and then it broke down. But the technicals were good, but not building as strongly as they are now. So I'm suspecting that if I go to my 120-minute chart, let me just move this one away here. I'm going to go to the 120-minute chart. This is going to be, I was going to say, my guess is it's getting a little bit overbought on a very short-term basis. 2363, right? So that's A, B, C, D, E. We're in leg F in the 120-minute chart. I'm also going to suggest that it really shouldn't be an issue as far as you're concerned, because it's had such a strong move. It's at 28, so you've got such a big cushion that the only thing I'm going to recommend to you is that, and I know that sometimes you do it and sometimes you don't do it, but what I am going to say is, in this case, I would not recommend taking anything off right now. Let it take it off for you. And I would just say to you, if you want, because if it pulls back here, the strong A says that the peak A shouldn't be that deep. It should have enough momentum to try to make it B very quickly. It's the B, leg B, that's going to be a deeper pullback. This is what I'm thinking right now. So I'm just going to suggest to you, you don't have to do it. It's entirely your decision. But I would, with a move like this, that is now 20%, no, it's actually 23 or so percent above the low that was made recently at 22, what did I say, 35? 22.75. That I would raise on a portion, or if I had options, I would take away a couple of options, but I would also look to take a little bit off that you would put back at about between 26.60 and 26.40 and 25.80, a little deeper, and you might have to wait about 5 days before you get that. But that's kind of what I'm thinking, because it's really a big move. It's not the move that as yet, because the weekly needs tomorrow to close out. I want to see if it closes above the 9 EMA, because it's been above the 9 EMA many times before, but always corrected and went back down. So I'm just going to say to you, that's at 27.39. So I'm just going to suggest that you might want to think, with such a big move, to take a little bit off, but I would not take it off right this second. I'd actually give it a little bit of room. So if you want to give it 60 cents, 70 cents, or you could say, hey, for 60 cents, 70 cents, will it go 60 or 70 cents higher than this? I think that's going to be tough. So maybe I'm going to change my mind, and I'm going to say, you know what, take it a little bit off now, prepare to put it back a little bit lower, but only to reward yourself and to say that's good money management, because everything is looking good. And when it's looking really good, that's when you want to be a tad cautious. And the 120-minute chart on balance volume is really close to turning down. So I think that just on a shorter term basis, I'm calling it a near term basis, 1 to 2 or maybe even 3 days, there could be a pullback. And that's where you might want to put that money back again. But that's just my recommendation. Now, I would love to say to you, wow, looking at this, I think that I could project out 33.50 is the 9-period moving average in the monthly chart. I just can't do it right now. I need to know where it stops on the first big pullback, whether it's from peak A or peak B, I'm not sure. I want to see how the 25.81 level in the 9-period moving average in the daily chart, how that holds, because if you don't even get close and it keeps making higher highs, then I'm going to be able to project 33.50. Right now, I just need another day or two to be able to do that.
Okay. Do you have, just quickly, Basil, if you look at the chart on the left-hand side, is there a gap there kind of at the same level we're at now? I know it gapped up today. Do you have a gap to the left-hand side?
I don't have any gaps on the left-hand side. No,
Okay.
the daily chart, I do have, well, it's not even a gap. It got filled in 30.58 and 30.59. No, I have no gaps
Okay.
until you get to the high of 32.42, and that's getting close to that 9-period moving average in the monthly. Now, so far, everything here is on track with a great entrance and a really good cushion. I'm just saying, you know what? Take it a little off. You can always put it back on again, a point lower or so.
Very good, Basil. Have a wonderful day. I appreciate your help. And
My pleasure. You did all the work. I just did the talking, and you're the one that did the action. Congratulations, Brent. Great entry.
All right. Take care, Basil.
You too. Have a good weekend. So, folks, now this is going to be very interesting. Let's go back. We were looking at the UVXY. UVXY is the ProShares Ultra VIX short-term ETN. It's made up. I'm not sure exactly quite how they make it up, but whatever they do, it's trading at 6.66. One of the aspects that I'm looking at here is that if ever there was an opportunity for a trade, but I can see because of the flat stochastic, I'll have to talk about it only as a short-term trade, a 2 to 3 day trade. This is maybe the time, and we'll talk about that when we get back. Basil Chapman also want to talk about the Q's 10-minute chart. I had a question.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So I had a question, a really good question about the QQQs. What do you do in a gap in the Chapman wave methodology? I'm only looking at price. I couldn't care how it gets there. Have a look at this. So let me do this A, right, the A, B, C. Actually, that should be D and E. All right, it just doesn't matter. This is D and E. The question was, what do you do with the gap? And this particular instance, the QQQ 10 minutes made a low at, let's go through this, 111.22 at noon on the 13th. Noon? How could that be noon on the 13th? Oh, today's the 14th. So it goes peak A, peak B, peak C, little squeaks to D, and then makes an arch formation. But wait a minute, the low is now 111.23 as opposed to 111.22. So that's a positive divergence. Then you get this gap up from overseas, right? The best would have been to look at the NQ. That's different because that traded last night. But look at the way the V-shaped turnaround, this is where the MACD and stochastic really do help you, other than chart formations that you should be studying and get to know very well as templates. So what happens is it spikes up. And then I had peak ABC because this looked like it was not just a continuation, it looked like it was a really sharp move. When I saw that it only went briefly to B at 112.13, pulls back, and then it can only squeak to 112.19, that said to me, I bet the stochastic is moving down and the MACD is turning around. So I checked it out because I did this before without the MACD and stochastic, and lo and behold, so I'm saying to myself, I believe this is going to be a G and that it should fail with a very sharp Lamont type bend in the racetrack right there. And if the MACD goes negative with a very fast moving average, the 9-period differential breaking under the red one, the slow moving average, probably you'll be down at 111.80, and that's going to say peak D, peak G, and I'll put in an inverted V, that little cap. And that says you did get a sell signal. Now you've got another sell signal without going to a D. And that is, in fact, what I would put in. So that's what I'm looking at. And if I'm looking at, and one of the reasons why I wanted to bring this up so it doesn't matter that you gapped up. That was the question. What do you do with the gap? That's the price. And if it held, this should be E/A. Sorry, I should have put that in. I was doing this very quickly. E/A, and then F/B, and then G/C. It could still make a D, but at this particular point, I'm thinking real good chance that it's probably going to be a G. Now, what would I do if I was trading the NQs? I don't usually trade the Qs or the NQs, but if I was, I would have taken off one contract or whatever it is, part of my contract, and I would have held the other with a stop that says if it breaks, and I would have chosen a particular level. If it breaks if I was long, let's say, if it breaks under that 111.84 level, I'm out of that contract. But let's just say I decided that I wanted to go short because all I would expect is a nominal peak D and then the move down because of the way the MACD and stochastic are acting. Then I would say if I was now short, I would put the stop in at about 112.12. All right, and it's 111.89. Just to make sure, I think we like to be as educational as we can right here. Okay, now I'm going to go back to the UVXY. So the UVXY trading at 6.66. What I'm suggesting is, and folks, if you've never traded these things, don't even think it, don't even put it on your agenda at all. Only those folks I know from my Traders Corner, from my subscribers, only those people who really understand that it's a vehicle. You want to get in, you want to get out as quickly as possible. In fact, if I treated them, all of the trades as one-day trades, we would have done a fantastic. I've tried to keep them a little longer, and it's just dumb. This one is also only a 1 to 3 day pullback going in from this afternoon to tomorrow, maybe into Monday. This is just, I'm speculating here. And I'm speculating only because of the 120-minute chart. I never even got to discuss this. I'll do this now. So in Elliott wave, I had for my 120-minute chart, this is the Chapman wave Elliott wave, right? It's only got the concept of Elliott that I use. And the concept is to go 1, 2, 3, 4, 5. Okay? One of the things that I should expect in a normal Elliott wave is from 17,063 in the Dow to 18,002. That's wave 1. Then we pull back to wave 2. Perfect, lovely. It's just a tiny little pullback, and very often you expect the rule of alternation. Maybe you can call this the rule of alternation because it kind of wiggled down to the trough C. And what happens, although it looks to me like it's pretty much like a straight line, and then you get a very strong move to the upside. It goes Chapman wave peak D, E, alternate count F/C, and then immediately goes to a D at 3, pulls back again just a tad, and then I said, under normal conditions, wave 3 to the upside, this is wave 3, should equal or be greater than wave 1. I say, you know what, I've done this so many times and fairly successfully in the analysis that I've just thrown that rule out from Elliott wave. It's the concept that I like, right? Because it adds a little dimension to the Chapman wave methodology rather than the other way around, at least for me. So what happens is we get a trough C, we start a brand new move, peak C1, C2, could be an alternate count, and then what happens, it becomes an alternate count, and we go peak A, B, C, D, and this was this morning when I sent this out, we were right there, and I said, my thinking is we're going to have a huge gap to the upside. That's going to complete leg 5, but more importantly for me, it's E. And when you're getting 5 can have flurries to the upside as well. So this is just a speculation at this point, but based on the Chapman wave E methodology, I'm suggesting that there's a chance that between now and tomorrow with options expiration, we will get some kind of a pullback. And that pullback will, in fact, take us down towards it's at 18,514. Well, this gap is huge. The low of the day is at 18,414. It even gaps up from yesterday. It's not very often in the indices you actually get gaps like this. So when it does happen, it's very significant. Could we give back the 140 points? I don't know if we're going to be able to do that. My thinking is we'll pull back and then we'll start leg. We'll make a peak B maybe tomorrow, and Monday we start to turn around to the upside to try to get to leg C. And by about Thursday, Friday, we're starting to head towards the leg D. This is just my thinking out loud here in the daily chart. So question is, and the Dan Claw asks the question, let me find the question. A lot of notes there in between. I must just find it here. There it is. Will you look at the UVXY and the TVIX? Okay, so I'm looking at the UVXY, and UVXY, as I said, was trading at 666. My thinking here is that in the UVXY, that if you were to start a little position right now, you've got to be prepared for some kind of wiggle room. So it's 666. Now let's go to the contract itself. So 666, let's go to the 10-minute chart. This is the 10-minute chart. So we're going to go to the UVXY. It's trading at 668, 666, somewhere around there. The pattern that I'm looking at says if you're 656, I think that's very reasonable. You can buy it right here, and you've got to have a stop at 656. Make it real simple. And I'm going to suggest something else, that if it gets above 682 by this afternoon, you put your stop at break even or give yourself a 2 cents profit, and then you can hold it in tomorrow, till tomorrow. Okay, we got that out the way. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow is now up 136, S&P's up 11.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, folks, this is, I just need to add UVXY. This has to be the tiniest part. If you've never done this before, the tiniest part of your portfolio. It's just got to be like almost an experiment. This is a perfect time to experiment, in fact, because the reward should be very short-lived. If it works, you can go 666 to 792 if everything works out. Very nice percentage gain. And if you're wrong, you've got yourself a 10 cent, I think I said a 10-cent loss. 10-cent loss would be about 1.8%. Is that right? Whoa. 6, yeah, small loss, certainly in points. It's very difficult to trade these instruments and not have at least you've got to give it a little bit of room on the short side, on the wrong side. So and just treat it as an experiment to get to know this thing, because at some point we're going to be making some kind of a chopping pattern that says more intermediate term pullback coming. And then you want to know how to go to the inverse, the SH for the SPY, the inverse, the short position, 100% short, the SPY, just as experiment so that you can learn how to protect your portfolio. This is a great opportunity to do it for very little risk. Always just make it the tiniest little risk and a very small position if you are just experimenting. So let's go on now. What we're looking at is this is what I did in the 120-minute chart, right? I'm trying to see now. Did I do something else as well? I did. How about that? In fact, I haven't even checked it out. I've just been so busy this morning. I won't even be able to check it out. Maybe I should, because I spoke about it. Give me 1 second here. So in at 11:20, 30 cents. Yeah. Okay, so we have taken a little bit of a short position at this particular point. So I just wanted to mention that. I mean, just fairness. I just want to be as open as I can. And now, if I'm looking at, that was the experiment that we're looking at right there. Did I do that today? Can't remember. All right, I'm just trying to find the chart of the Dow. I've got so many charts here. There it is. So this is an extension of leg B. All right, leg B has gone up. And I'm suggesting that the 18,650s is kind of where I'm going to be looking to see, is that the place where we want to, is that going to be on the weekly chart, leg D? And that's all I'm saying, okay? So the MACD is still very strong. Stochastics at 97%. So I'm not sure yet what will make it give us a turn down. My thinking it'll be something political or economic, something like that. All right, now I want to get back to the questions. We've got Rob in Ann Arbor, Michigan. Rob, how are you?
I'm doing well, Basil. How are you?
I'm well, thank you.
Just curious, looking not yet, as you touched upon, another analyst I follow looking for ideally a topping process next week, possibly.
Oh,
and
all right. Yeah, that's what I'm looking at. Yes.
Yeah, well, and it's interesting because he's also targeting 18,650-ish.
Oh, really?
But we'll see. We'll see.
Okay.
But again, just looking ahead in light of the move with the utilities here, the double short position ETF SDP.
Have you ever bought this before? Is this the first time you've been looking at some short position on the XLU and now you found one, but have you ever traded it?
You know what? I usually only trade the broad market indices, double short S&P Dow typically, or even the European EPD. I don't usually go into sectors, but I just seen this move it's had, and looking also with what's happening with the yields.
So can I just do this as you're talking? So SDP,
Sure.
I've got a 120-minute chart up now, and I'm going to show you something very interesting.
Okay.
I have no idea. I'm just saying I'm almost sure that there's going to be. Yep, there it is. If you look at this chart, this is the 10-minute chart. You'll see that there was one trade for 100 shares up at 9:40 on the 12th at 31.35. So what I'm going to suggest to you is, more as an experiment than anything else, why don't you buy as soon as you think that this is exactly what you want to do to be able to short the XLU. I'm going to look at the XLU in a moment, but I'm going to suggest, because the volume is so, it's like you've got to book by appointment to get shares. Getting the shares themselves, I don't think is going to be an issue. Getting out could be an issue in that you will not get your price. That's the only thing I'm going to say. If you get the direction right, you'll get out with a nice profit, and you'll say, I'm going to have to give up 30 to 50 cents because it could be anywhere, the give and take between the offer and the bid. But that's not the issue. The issue is I just want you to get a feel for the fact that this is a very different vehicle. If you get the XLU positioning right, you will be able to get out of this, because they're going to have to give it to you at some point with the very next trade that occurs. It's going to have to be your trade. It might not be perfectly at your price. Now, what I also wanted to say is that the XLU has made a peak E/A. I don't see any chance right now that it's an A. That means you're going to go to a B and a C and a D in the daily. I think this is an E at this particular point. Almost certainly by the end of the day, I'm going to be putting a down arrow here. And I think in terms of risk, reward, and opportunity, your idea, and I even have to check now SDP, because I actually have never looked at. I remember once going through these things, and then I decided I wasn't going to do anything, and then it was just way off my list. And this is 2 times short, I think. Select, or is it 2 times short XLU. I don't know if it's probably, it probably is the XLU, because it's an S&P Utilities. So here's what I'm going to recommend. You've done nothing yet, right?
I have not, no.
Okay, so I don't know how much you were going to buy of the SDP. XLU is trading at 51.77. So you do not want to short. You want to actually buy the long position that's already a short position.
Correct? Double short, yes, correct.
So then, can I make a recommendation?
Sure.
You start a position right now as we're speaking, and I'm going to be fancy about this. It's trading at 31.07. Put in a bid to buy at 31.04, just 3 cents away.
Okay.
And then see how much time it takes. And my recommendation is, do it first as an experiment. So I would do 10, 15 shares. So you'll be paying brokerage fees and all that. It's not a big deal, because this is a starter position. And see how long it takes you to have it. If it's filled just instantly and it's 3 cents away, it means that it's a viable instrument. If it takes a while and then finally, boom, 31.04 is like 30 minutes or 40 or an hour later, then I'm just going to say to you, be aware that it's not a very tradable vehicle. We are trading the trend. In other words, you're buying it now because if it gets to 32.50, you can say sell at 32.40, and you have a little wiggle room because you've put it under the price, and at some point you should get it, but you're probably not going to get the exact number if you put it above the bid, above what you're expecting. You know what I'm saying right now?
No, I pulled the chart up. I'm seeing the volume, and you're absolutely right. It's only at, 1,700, the volume.
Right,
which is
but I can assure you that if you get, there goes that buzzer. I can assure you that if you are correct in the trend, and I think that there is going to be a shorter-term downtrend, and we actually are long we are short bonds via a long entry, and we're expecting yields, at least for a short term, to move higher. I think you're right. So here's my recommendation. Put in a little bit of a bid. If you get it very quickly, you can add to that. But I would add to it thinking I would rather add to it and then increase that if it gets to 31.55.
Okay. I appreciate it.
Okay. Good. Thanks so much for calling, Ron. Let me know how it goes. We'll be back, folks. Dow's up 134.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Watching SDP to see if Rob put in a bid. It's taken a while. There's nothing. It takes a little while. You got big gaps here, so nothing's happened. All right, let's get out of that. All right, very good questions. Let's just deal with them one at a time before we run out of time. So, Deutsche Bank question here: Barclays, BCS, Royal Bank of Scotland, RBS. how they're acting, and the FTSE closed down. Goldman earnings next Tuesday. Would you take a short? Morgan Stanley investment banks IPOs have been down for the quarter to be reported, although maybe pushed down the road to later quarter when released in Dow market. Okay, let's just do this. Deutsche Bank has had a really nice move. In any of these, if there are earnings coming out, my thinking is that they're going to just throw everything but the kitchen sink. They've already been doing it, and that maybe they could actually talk about a better quarter coming up. So I'm done with this, except when we're in a position like we've been in AT&T, we've taken dividends, we've been through earnings and everything, but the chart is so strong. I'm prepared to hold it through I don't even care about the earnings at this point. I will for the next one, but up until now. So that's different. But just to be taking a position now, to be shorting, to tell you the truth, even Goldman Sachs, I've got a feeling that it's in leg B. It's ready for a pullback. But the chart looks like it wants to move higher based on that. You remember it was in the 145, 147 area, and I said I think Goldman Sachs is looking better now. That was about a week or so ago, and I do think it is. So it's such a risk. I would say to you this, GT, rather wait for a sharp pullback if you get it, and then I would actually buy Goldman Sachs because I think there's upside. There's more upside to go until I get my weekly close that says, okay, this could be leg D and peak D is about to come. So and I'm looking at the Dow, it needs to get to D, S&P needs to get to leg D. So I just don't, I'm done with taking that kind of a gamble. That's the way they interpret it is what they say. I like the chart. I think if Goldman Sachs pulls back from 161 anywhere to the 157 to the 153 area, or even 151, I'd rather be looking at it as a buy for a quick pop to a leg C and a D and see if it can get there, or at least to 166, the 200-period moving average. That's my thinking. So I'm not going to give an advice there in terms of shorting. I think we're actually, just for the moment, we're kind of done with the shorting. It's more like buying just for another week, and then I'd be looking at shorting. So I hope that answers the question. Bob asked, yes, I just went through the whole thing, Bob. This is where I would just nibble on a short position, and at the same time just have a pretty tight. You must have a tight stop because it's either going to work. Today's either going to be in the E-mini, as I said in my report to my subscribers this morning. The E-mini high today, the round number of 2168. Let me go to this contract here because we're about to run out of time. I said that it's probably a peak E in the 120-minute chart, and that we should be pulling back from here. But I'm only expecting a pullback maybe into Friday into Monday, and then I have to see what happens because there's a lot of strength out there. All right, folks, let's make this real easy. The volatility index, VIX index, is going to be your clue. It's trading at 1298. If by the end of the day the market gives back about 50 points in the Dow, maybe 7 or 8 points in the S&P by 315, somewhere around there, then we should have a week close and a week Friday. This is what I'm looking at. If not, hey, there could be another gap up tomorrow. I think we're done with those gaps. I've got a feeling there's a little bit of weakness here going into the beginning of the week, and then we start to move higher. So I hope that helps you. And stay tuned for your swimming lessons. We had great shows early this morning. Hopefully we can keep that going. We'll go all day Thursday. Of course, you've got all the way through to Andy Hecht. You've got your swimming lesson. You've got Steve Rhodes. You've got Dave White. You've got Tom O'Brien. And then Andy Hecht. Wow, what a lineup. I'll be back tomorrow. Have a great day. Hey, check out my opening call. I think you'd be very pleased. We've got some real nice trades. Stay tuned, and I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.